what this trade war escalation could mean for world markets and global growth in specific. Jahangir Aziz, head of emerging market Asia economic research at JP Morgan, joins in with his perspective. So does Peter Cardillo, chief market economist at Spartan Capital Securities, also joins us from New York. Jahangir, let me come to you first. Very good morning to you. Do you think this is just more noise? Yes, they have, imposed these restrictions on investments coming into the tech sector. They have imposed a fair amount of tariffs on imports as well. But, I remember one of our commentators was talking about the fact that given the size of the Chinese economy, which is $14–15 trillion, imposition that covers about $50 to $100 billion worth of products is still not material enough to move the needle when it comes to growth. But I want you to come in with your thoughts on that.
So yes, I mean, if you look at, if you do the usual kind of arithmetic that people are doing, which is, let's impose 25% tariffs on $100 billion, then it's about $25 billion. Let's divide that with an economy of, $10–12 trillion, and you get numbers which are in the second decimal points. So I think if you look at it that way, it looks small. If you also look at it the way in which, other way of looking at it is to look at, what exchange rate change that needs to happen in order to absorb a shock like that. And these numbers start looking, very small. But I think it hasn't been, the problem hasn't been with the tariffs. I think more than the tariffs is the investment restrictions and the restrictions on the export front, which are still coming, and the 232 related auto industry sanctions, which are the ones which are much more problematic. What is also problematic is that if you look at the supply chain that goes through China into the U.S., and you look at the countries that are associated with the supply chain, and then you divide it with their GDP, then those numbers look very large. So I don't think it's just a matter of U.S.-China trade tensions. It's a spillover effect that will fall on other industries and in countries that are part of the global supply chain, which is problematic.
Peter Cardillo, how much of a fear would you assign to this escalating or heightened talks of further tariffs on China? And would you say that this is just a war of words which is still at play, or the trade war fears are for real now? Because you've already got Harley-Davidson, while the stock cracked about 6% overnight, they're moving their production already outside the country.
No, I think it could turn into a serious situation. It's quite obvious that the president administration is trying to fulfill its promise, and it's using some pretty strong tactics and imposing not exactly what we would think in terms of a huge amounts of penalties, but certainly it's headed in that direction. So I think what we really have to focus on is what the market is focusing on, and that's that fear factor that this could turn into a full-blown trade war and eventually knock the wind out of U.S. growth and possibly global growth. So we're seeing that fear factor being flashed in the bond market. And I say that because we continue to see yields that are basically moving lower when they should be moving higher. If you look at all of the macro news that's come out, certainly it's quite strong. We saw that with new home sales today, where the number came in nearly 5 times more than what the market was expecting. And so it isn't a question of whether or not the economy is performing. It certainly is performing. but it's a fear factor, and that fear factor is being transmitted by the bond market, and of course, equities as well.
Jahangir, if I look at the central theme for most of the global brokerages and economists, they are quite upbeat about the US economic recovery. But do you think it's a matter of time realization would kick in? Because first, we thought that it was a war against Chinese dumping of cheap goods. But now it is going to be a tech which is it's a war which would be unleashed on the tech also. Now the good part of the story for the US economy is that tech stroke US consumer companies are growing at 15-20% plus, which is charging the US economy. So do you think it's a matter of time one needs to reassess the US economic growth? Because if the trade war escalations become real, then it's bad news for for everyone.
No, if the trade war becomes real, of course, it's bad news for everyone. I mean, not just for tech companies, but for almost everything under the sun. But I think that we are not. So far, all that we are absolutely sure of is that by July 6th, you will see $34 billion of Chinese exports to the U.S. coming under 25% tariff, and you will see a reciprocal impact coming through from China. Beyond that, we are still at the stage at which we are talking about it. We are threats on both sides are being hurled at each other. But I think, as the other speaker was saying, I think it isn't so much whether or not you actually end up in a trade war, but the mere fear of a trade war, I think, is will have an impact. It is already having probably an impact, and we haven't seen the data come through, which is on business sentiment, which is on capital expenditure. Consumers are doing well both in the U.S. as well as in your area, but it's really capital expenditure which probably will be the first casualty of this war. Even if there isn't one, the fact that there is such a high degree of uncertainty that has been imposed on business environment and business sentiment will have an impact on investment decisions, and delays in investment decisions, delays in capex spending will start having an effect in the second half of 2018. And I think that's the concern. The concern is that even if we don't get into a full-fledged trade war, whatever that might actually imply, the talk about it is as dangerous.
Jahangir and Peter, thanks very much for making sense of it all. Appreciate you joining us this morning and giving us some perspective on the story.